Hi, good morning. Thank you so much for joining us and spending your morning with us. My name is Joanna Nelson, and I'm with the New Mexico Economic Development Department, and I'm on the Finance Development team. I'm a Finance Development Specialist, and today we're really excited because we are hosting a really important webinar today and addressing some important issues within the financing world of the state. So we're really thrilled today. This is a part of our Finance Development Team webinar series. Every month, if you're not aware, we host webinars that address financing topics or financing programs within the state. So if you're not aware of that, please sign up for our newsletter. You can do that on the New Mexico Economic Development website, and you can get updates on what topics are coming up. We've got some good topics signed up for the rest of the year, so please do that. Just to let you know, we will be recording this webinar, so we will post it on our YouTube page. We'll send you the link after the webinar is concluded, and we will send out the PowerPoint presentation that will have all the live links and the contacts for everyone that's involved in the webinar. So if you have to jump off, if you're unable to join us, we'll be following up with that information. So I am going to give a brief overview of our services, just so you're aware of it. But we're really excited to have Myrriah Tomar, who is the new director of the New Mexico Economic Development Department's Office of Science and Technology, and we're so thrilled to have her. She's joining us directly from Rice in Texas, and so she'll be talking about some of the financing programs that her office oversees that are in direct relation for providing financing opportunities to startups and grown companies. And then also we have John Chavez with New Mexico Angels and Dan Brooks with Sun Mountain Capital. And the department is always happy to work with them and collaborate with them and hear about the work that they're doing in the private investor realm. So really excited, and really briefly just gonna let you know that the Finance Development Team, we do provide a variety of services for companies and as well as communities. We look at financial packaging, we can look at financial statements, any type of service that would benefit a company that is looking for financing, whether it be private, debt equity. We're here to help. And in addition to those funding sources, if the company is looking at what state incentives are available, what other resources are available, like federal and state grants, we can help in that regard. So please reach out to us. We're happy to help. And as you can see on this slide, we've got our programs listed, and I'm not going to go through all of those, but these are all the programs that the team oversees. So reach out to us if you have any questions. And then as well, if you're not familiar with the New Mexico Economic Development Department's regional reps, these are the department's boots on the ground. They're the front lines, and so each one of the regions has a regional rep located in that area, and they live and work there. And you can get a hold of them. They'll set up meetings. But these people are there to answer any questions about the department services, about state services, and provide any type of assistance that they can to communities that are interested in economic development and supporting entrepreneurs and company growth in their communities. And as well, if you're lucky enough to have New Mexico Main Street area in your community, these are fantastic programs and resources as well. So reach out to them, and they can provide help on financing issues too. So as I mentioned, these are live links. So when you get the presentation, you can click these directly. So without further ado, I want to turn it over to Myrriah, and she'll get started on the webinar.
Okay, thank you, Joanna. I appreciate that. Good morning, everyone. So I'd like to start by giving you an overview of the programs we have. I'm sorry. So the agenda for this talk today will be to give you an overview of the Office of Science and Technology, discuss the Innovation Voucher Program, and then talk about the differences between the federal SBIR funds and the state SBIR matching funds that our office provides. Then we'll go into angel investment, and John will talk to you about that, John Chavez, and followed by the Catalyst Fund, which will be presented by Dan Brooks from Sun Mountain Capital. And finally, I'll wrap up by giving you a quick overview of the programs that the department offers, and Joanna kind of touched upon these a bit. So I just want to begin by giving you an overview of the State Economic Development Department mission. Our mission here is to enhance the leverage and make a competitive environment to create jobs, develop the tax base, and provide a toolbox for business development. So here we support programs and initiatives that support our mission. And we know there was an article that came out recently where the Kauffman Foundation noted that the fast-growing startups play an outsized role in job creation. So we focus a lot on startup companies. So here in the Office of Science and Technology, as I mentioned, we're one of several departments within the economic development. And the Office of Science and Technology was created to connect New Mexico's innovation infrastructure to the commercial market. We offer several programs, one of which being the Technology Research Collaborative. And from here, we have several programs that have stemmed out of this. We have the Defense Industry Diversification Program and the Innovation and SBIR matching grants, which I will talk more in detail in the slides to come. So I just want to emphasize that the Office of Science and Technology plays a key role in leading and executing programs that enable startup growth and relocation of startups to New Mexico. So today I'll be focusing primarily on programs that have come out of the Technology Research Collaborative and the Innovation and SBIR matching grants. So here in our office, the goal of the Office of Science and Technology is to help early stage startups and high-tech businesses by 1, reducing New Mexico's reliance on federal funding, 2, helping businesses address pressing challenges by offering state grants. It's reported by the Kauffman Foundation that 81% of entrepreneurs don't access formal financing. And finally, 3, our goal is to create policies and programs that encourage innovation, commercialization of ideas that are born here in New Mexico. So I'd like to start by discussing the innovation structure, not just here in New Mexico, but in the startup ecosystem in general. So New Mexico innovators, they come from a diverse field of expertise. These are typically people that are disruptive thinkers, creative individuals, and the thing that they have in common is that these groups of people have the capacity to turn an idea into a useful innovation. So New Mexico is unique in this respect because its innovation infrastructure is built in part on the strengths we have in our national laboratories, such as Sandia National Labs, Los Alamos National Lab, and the Air Force Research Lab. And the other part of our innovation infrastructure here in New Mexico is built on our research universities, such as New Mexico State, New Mexico Tech, and the University of New Mexico. So here in the Economic Development Department, especially in my office, we ask ourselves, how can we better help small businesses and high-tech businesses? And how do we connect New Mexico's innovation to the commercial market? And the answer to this is to provide programs that support a culture of innovation in New Mexico. So there are several programs that the Office of Science and Technology offers, and these I like to call kind of fast-track programs which help with commercialization. So these are programs that help to get innovations out of the laboratory and to the commercial market. So one of them being, as I mentioned, innovation vouchers, the SBIR matching grants, and also venture capital funding via access to the Catalyst Fund. So beyond this, I mean, we want to help companies, small companies, get to commercial market, but we also want them to succeed beyond this. We want them to experience business growth, expansion. We would like to see increase in tax revenue and have them increase the capital stack here in New Mexico. And to me, that's a win-win both for the economic development of the state and also for the individual success of businesses that benefit from these funding opportunities. So I'd like to move on to the next slide, which describes a list of various funding stages, starting from startup and seed to Series C and D funding, which goes upward of $3 million to $50 million. And what you'll see in between is a funding gap between the startup and seed funding and early stage. So this is something that is commonly pointed out and observed in the startup ecosystem. And this is termed, the funding gap is termed the valley of death, in which the innovation either becomes stifled or can make it past this and go beyond towards commercialization. So one question we ask ourselves here is, how can New Mexico bridge the funding gap between startup and early stage companies? And the answer to this is investment programs that are offered by the state. And so what you'll see on the left-hand side is a list of New Mexico investment programs. Specifically, the ones in blue are the ones I'll be focusing on, and the ones that we believe that can help bridge that gap and overcome the valley of death barrier to commercialization. So the first program I'll discuss with you today is the New Mexico Innovation Voucher, which is important in assisting early stage companies with small competitive grants that range around $2,000 per individual award. So these innovation vouchers were created to help companies focus on achieving their business development goals. So the awards go directly to an approved economic development program. So you can see here on the bottom that there are 13 approved programs to which this $2,000 can go towards to help your company succeed. So as of now, the program has successfully assisted 25 companies, and this is since its initial pilot in 2016. And the stats on this is continuously changing, but the most important thing to point out here is that these innovation vouchers help in companies later obtaining follow-on investment sources. So up to now, there's been almost $1 million in follow-on funding that have come from companies that have taken advantage of these innovation vouchers. So one question we often get asked is, who qualifies for innovation vouchers? And the answer to that is, you must be a science and technology company associated with an approved incubator or accelerator program, as I mentioned on the previous slide. You must be based in New Mexico, and typically the businesses that are eligible can apply for 1 award per calendar year and no more than 3 awards over a period of 5 years. So in regards to this, I just want to add a footnote about applications for innovation vouchers, because I've had a few people ask me about them. So there's been an update to the program, Now applications will be accepted and awarded on a quarterly basis, and I am anticipating that the next application period will begin somewhere near the end of October or early November. And so I'll be sending out reminders about this, but if you'd like to be added to our listserv, just send me an email and I will get you added to that. So now I'm moving on to another type of funding, which is not directly part of the Office of Science and Technology, but in order to explain the program later on, that will be, I need to first talk about the federal SBIR program. So the federal SBIR program, unlike innovation vouchers, is, as I said, federal, and it provides funding for research and development for early stage startup companies. And this program is primarily responsible for helping these companies fund research and development. These are companies that have technologies with high potential for commercialization. So typically, these grants can be awarded from any of the 11 participating agencies shown below. So I'm not going to go into too much detail about it, but individuals or companies that qualify for the small business, the SBIR grant funding, have to be a for-profit business. They have to have fewer than 500 employees. They must have the work being done here in the United States, and more than 50% must be US owned. So the federal SBIR is a gated process that has 3 phases. The first phase being the feasibility and proof of concept phase. So typically individuals or companies that apply for these awards get around $150,000, if not more. And then there's a phase 2, which is focused more on research and development. And these grants are typically about $1 million or more. And the idea is that these federal grants support innovations that will lead to commercialization. However, despite that being the goal of the program, the phase 3, this is some commercialization are funds that are not covered by the federal SBIR grants. So these are non-SBIR funds. They either have to come from private or public funds. And the typical application process for this is, the solicitation topics will come from one of the 11 or several of the 11 agencies. You'll submit a proposal, there will be an evaluation, and finally the phase 1 or phase 2 award will be sent out. So this is my last slide regarding federal SBIR grants. You're welcome to visit their website to get more information, or luckily enough, the Arrowhead Center at NMSU is actually hosting a free webinar tomorrow. So if you'd like to learn more about this, you can click on the link and tune in to their webinar. So this brings me to the state program, which is the New Mexico SBIR Matching Grant Program. So unlike the federal SBIR funds, these are state funds, and these funds can be used for commercialization purposes. So it has the same goal as federal SBIR. However, it differs in that the match funds are used for commercialization expenses. So individuals or companies that have a phase 1 grant are eligible to apply for the New Mexico SBIR matching grant and can receive up to $25,000 if you have a phase 1. And so, as I said, this can be used to cover commercialization expenses. For companies that have received the phase 2 federal grant, they are eligible for SBIR matching grant from New Mexico of up to $50,000. So often I get asked the question, what do the matching grants cover? So although this is not an exclusive list, some of the things commonly used, one of the ways in which the funds are used is for intellectual property assessment, patent filing, commercialization activities, and as you can see the other things listed there. I won't go through the whole list, but I'll also mention that there are lists of expenses that are not covered. So these funds are not allowed to be duplicated, so the federal funds that you receive cannot be duplicated with these funds. And, we're happy to report that as of 2017, which is when the program was piloted, that 7 companies have been awarded the SBIR matching grants. And the eligibility for these grants, I think the most important one being you must have an active phase 1 or phase 2 SBIR grant, or have a notification at the time of applying for the grant through us. Also, you must be headquartered in New Mexico and have 50% or more of the payroll expenditures here. At least 31% of the state level match must be performed in New Mexico. And also, importantly, there should be no overdue tax debt, or the company shouldn't be involved in any lawsuit, like active lawsuit. So on the right-hand side is just an example of the award and report milestones that are required for companies that receive the award. So the funds are released in 3 disbursements over 1 year. And upon receipt of the reward, we immediately release 25% of the funds, and then release them and 2 more disbursements after that. And then the requirements we have are, 2 years after receiving the award, each year we would like you to submit just a quick 1-page progress report, and I provide the format for that. So finally, that leads me to announce that the application period for our SBIR award matching grant is now open, and you can find the application on our website. I would encourage you to read the application thoroughly to ensure that you are eligible. All the applications are due by Friday, November 2nd. And if for some reason you're not eligible right now, let's say you don't have a federal SBIR grant, then I would encourage you to apply in the next round. And I anticipate that the application period for that round will open sometime in early spring 2019. So with that, I will hand this off to John Chavez, who will be.
Good morning, and thank you. Appreciate it. Thank you all for attending this seminar. We appreciate it. I'll go through my slides relatively quickly. So, see if I can get this going. So my name's John Chavez, and I am the president of the New Mexico Angels. I've been doing angel investing for 10 years now. I've been the president of the Angels for 10 years. And when you talk about companies in New Mexico, we do have, I'm sorry about this going back and forth, we do have a very robust ecosystem. And if you think about a company that has started, really the entrepreneur is the first one that funds that company, and we call that bootstrapping. But in New Mexico, we're blessed with having some micro lenders. That's West, Accion, and the Loan Fund. And they provide small amounts of loans anywhere from $7,500 up to $75,000. Accion actually has a bigger program that can get you into the $150,000, $200,000 range. And then you talked about investing in companies through your friends and family. And that's where you go to your cousin, your mother, your dad and say, hey, I got a great idea. I just need a little bit of capital to move it down the path. And typically, these are handshake kind of deals, but we encourage everyone that does a friends and family round to actually write everything down, make sure that everybody understands what the expectations are. And then you go into what we call non-dilutive grant funding. That's the SBIRs, STTRs. You know, the NIH has a great program. The DoD has a number of programs that you get involved with. So they'll do a call, and then they'll ask for a company that is doing specific focus on a problem that they have. And right now you can go into crowdfunding. There's a couple of crowdfunding sites. And then there's angel investors. And angel investors are early stage, high risk, high return kind of investors. We'll go through those in a bit. And then you have the Catalyst Venture Funds, and Dan will talk about those. And then you have the really robust venture funds that are doing the $1 to $3 million kind of deals. So this is the New Mexico Capital Stack, and this is was created by Tom Stevenson from Verge. And as you go up the axis of funding from 100K to 10 million, you have a decreasing return. And as you go across the bottom from idea to business plan to prototype to beta sales, you have a decreasing risk. And if you look at that, the friends and family round is usually the highest risk, highest return, because they're the most early in. And then you have angel investors that come in after that. And then as you start growing the company into a prototype with more funding, you're talking about strategic partners and venture capitalists. And banks really don't play a big part in the startup community until you have profitability, consistent profitability with consistent sales. But this is just a great slide to show that there is opportunities in New Mexico for small companies. Okay, I'm going to do the next one. So friends and family round is the easiest to raise, fastest to raise. That's usually 5K to 100K, and typically it's people that know you and understand what you are and what kind of business you're running. There is some pitfalls in there though. You do have a challenge with, if you're going to continue to get funding, there is a probability that the later stage professional investors are going to want you to make sure your I's are dotted and your T's are crossed. You have crowdfunding that allows you to raise a small amount of money, or in the case of Meow Wolf, a large amount of money through the crowd. And there's equity platforms, and there's traditional platforms where you say you got a great business and you give them T-shirts and nice little things for them to provide you support of that company. The challenge with those is you have to fulfill your promise to your crowd. And sometimes that's a bit of a problem when you're trying to raise money from professionals. So the next is angel investing. And essentially this is high risk, high return kind of investing. There are angel groups across the United States that do everything. They fund telecom, they fund women-only investments, they do university-only investments. Angels are very, very important. As you can see by the slide, in 2017, $25.3 billion investments, 64,000 companies, and the average deal size was about 320,000. The next one is an average angel deal, and it's from an angel perspective. If you're an angel, you typically do $10,000 to $100,000 worth of investment. An angel size deal is $100,000 to $500,000. A typical investment is seed to early stage, and we are doing most of the early stage investments. The key is venture does a lot, but they don't do as many, and they don't do as the level of investment. So the next slide is the New Mexico Angels. We're a 501c6. We have about 60 angel investors in New Mexico and also out of state. The typical deal for us is anywhere from $100,000 to $250,000. We have service providers, which are our banks, legal, CPA, and marketing. And we've done Samba Safety, Ecopesticides International, Verde, Antibright, Lotus Leaf Coatings, and many, many more. We typically do about 4 deals every year. Once again, we have a very broad funding approach. You have Knowledge Reef, which was a web social networking company that did not make it. Acoustic Cytometry Systems, which is a medical device. Therapeutics was another medical device. T-Spot was retail. Preferred Produce was retail and agriculture. Nocera was pharmaceutical. Vibrant is an aircraft testing company. Next slide, please. Sorry about that. There we go. Just give you some idea of the number of investments. As you can see, we typically do about 1.4. Sometimes we get in the $2 million range. In 2017, we did 0.09, but we also started our own little venture fund. So that took a little bit of that capacity away. Once again, we're doing, 3 to 4 companies. What we look for in a company is some type of trade secret or secret sauce, a solid management team, a scalable product or service that provides a huge amount of revenue in a short time frame, a desire for advice and coaching, and a good deal for the angel investors. Go back down, Myrriah. Yeah, there we go. So one of the slides was the angel tax credit. One of the beauties of being in New Mexico, if you are an entrepreneur and have a company that is eligible for the angel tax credit, then what that allows for you to do is to tell people that you have the ability to go to the state and they will give a tax credit to people that invest in your deal. And so a typical nice thing to do is have a company that is investable by the New Mexicans. The New Mexico folks invest in the company, and then you get that angel tax credit. This slide just shows you a little bit of what we use to do the process. We typically meet with the company, do some vetting, screening. If we like it, then we'll put them up in front of our angel investment group over a dinner. And then if there's enough interest, we'll move them into the due diligence process. And then you have the slide for the angel tax credit that just popped up. And it is a really nice opportunity for entrepreneurs who have a company that fits under the focus of the New Mexico Angel Tax Credit to promote your deal and allow the angels to get a tax credit on it. With that, I want to thank everyone's attention, and I'll turn it over to Myrriah.
Thanks, John. So our next speaker is Dan Brooks from the Sun Mountain Capital. He'll be discussing the New Mexico Catalyst Fund.
Great, thank you for having me. Looking forward to having the opportunity to present some information about the New Mexico Catalyst Fund. Ryan, if you could please go to the next slide, please. So the New Mexico Catalyst Fund was launched in 2016, really based on the idea that there was kind of a lack of institutional seed capital, so sort of that $500,000 check range in the state of New Mexico. I think, the angels do a really great job at investing at the seed stage up to that very early stage, and there's also capital available later on, but the Catalyst Fund kind of fills the middle slot there. And, essentially the fund was formed with capital commitments from the New Mexico State Investment Council, New Mexico Economic Development via the United States Treasury's Small State Business Credit Initiative, and investment from private institutions in the state of New Mexico. So the way that the Catalyst Fund is set up is a fund of funds investment vehicle. And a fund of funds investment vehicle is a way to invest in startup companies without investing directly. So instead of going, as Sun Mountain Capital directly to a company, we instead invest in other venture capital fund managers here in the state of New Mexico, who then go out and evaluate companies independently for investment, typically in the form of equity. So the Catalyst Fund is a total of $20 million. There's a private match required for investment into other fund managers. So the investment impact we anticipate to be at least $40 million, all invested into New Mexico companies to help them grow to where they can be at that point of maturity to be able to bring in larger investment rounds from regional and national funds. You could go to the next slide, please. So, this is just a summary of what I had discussed before, but just to go through this again, we look to invest in qualified in-state fund managers with a balance of new emerging managers and some of the folks that have been active in the ecosystem for a while. The Catalyst Fund does not invest more than 50% of the capital into each of these portfolio funds. And what we look for in these portfolio funds is really being positioned with the New Mexico ecosystem where they can add value and really be helpful to the companies they invest in. So what sort of companies would typically fit these investment profiles? So seed and early stage startup companies that focus on technology and are well positioned to have a high impact level on the state of New Mexico. Really a lot of the things that John outlined are the same type of companies that would be a fit within the Catalyst Fund mandate. Myrriah, if you could please go to the next slide. So just to give an update on the current status of the New Mexico Catalyst Fund, 6 funds have received commitments that have been publicly announced. Those funds include the Arrowhead Innovation Fund in the southern part of the state in Las Cruces, Tramway Venture Partners, which is based in Albuquerque, focused on healthcare type investments, Cottonwood Technology Fund, which is based in Santa Fe and focused on advanced materials investments, ABQID, which is based in Albuquerque, and that's more of a generalist seed stage firm with an accelerator component, NMEDD Ventures, which John Chavez is a member of, which is the venture capital fund that was launched by the New Mexico Angels based in Albuquerque, and Bluestone Venture Partners, which is more of a early stage life sciences investment fund. And to date, there have been 4 companies that have received investment from, at least one, if not 2 of these portfolio funds. Those companies include Biotech, which is a energy technology company, Harmonica Technologies, which focuses on a genome sequencing technology, AdWallet, which is digital media, and Beno Bio, which is focused on life sciences. So when we look at really the characteristics of the type of funds that we look to invest in, we want to have funds that have either experienced investors or experienced investment committee members that sit on the committee that helps the fund manager make investment decisions. But also, we really look at both broad industry and geographic diversification. So we want companies that are in different parts of the state and different industries to have a chance to pitch to these fund managers and potentially receive investment. Next slide, please. So for companies that are seeking funding from the New Mexico Catalyst Fund, where do they go? And I think really the first step, which is really a great resource, is the New Mexico Economic Development Department's website that summarizes the Catalyst Fund, as well as going through a bit of a background on each one of the funds, what their focus is in terms of industry and any other unique elements. But also, there's a great set of resources in terms of how you actually prepare to meet with these investors, because it's important that when you do go in, you know that you might be a potential fit for their portfolio, and that you really are the type of company that would benefit from or wants to take on venture capital. So each fund manager in the Catalyst Fund has independent investment criteria and independent investment focus. So spending some time to get familiar with the background of the fund manager, the industry that they're focused on, the size of investment that they're looking at, any other potential companies in their portfolio that might give you an idea of what they're looking for. As I mentioned, there are a number of different focuses within the funds that have received commitments so far. So, not every fund is going to be a fit for every company. You really want to look for, if you're a life sciences company, an investor focused on life sciences. If you're an advanced materials company, investor focused on advanced materials. And, if you're a software company, an investor that understands and has a focus on software. And I think an important thing to really evaluate when you look at bringing in venture capital funding to your company is really whether it's the right tool for your business, because it's not the right tool for every business, but for the businesses that it does make sense for, it can be a really great thing to bring in, but it comes with, you know, a couple conditions that I think it's important to be aware of. So because these funds are looking to provide a return to their investors, they're looking at high growth opportunities that have the opportunity to return a substantial amount of capital at a high multiple on the invested capital. Now, that typically presents itself in some sort of strong technology component, unique differentiator, or some sort of market advantage. These investments are typically made in the form of equity because they're looking for those higher return multiples. Debt is typically not used as frequently. Instead, you'll find a venture capitalist coming in and investing for, you know, a portion of your company ranging from essentially 10 to 30% is what you might typically see. And what you need to be aware of is when you bring these investors into your company, you're launching a 6 to 10 year close partnership with that investor. They'll typically be on your board of directors, have a very material say in the way that the company is managed. Maybe not on that day-to-day level like the founder and the management team would, but certainly on a strategic level, helping with fundraising, helping think through really how to grow the company. And another thing, you know, to really recognize when you bring in venture capital investment is that these investors structurally are looking to return capital back to the investors in their fund, which would include the Catalyst Fund. What that means is that those investors will be looking to either sell or otherwise exit the company in a way that they get their capital back. So if you think through all those things, then it still makes sense to have a value add partner with industry networks, strategic expertise, and capital to help really launch and grow your business to another level. Then venture capital could make a lot of sense, and the Catalyst Fund portfolio funds could be a really great resource for you to evaluate. Thank you all for your time. It's been a pleasure to be able to share some information about the Catalyst Fund, and please feel free to ask any questions.
So thank you, Dan. So we're going to wrap up in the next few minutes, but I just want to discuss some frequently asked questions that are sent to me here at the Office of Science and Technology regarding both the Catalyst Fund and the angel investments. So one of them is, what is the timeline for obtaining investment funding through the Catalyst Fund? And as Dan mentioned, each company it depends on the stage of the company, so the timeline will also vary. The second commonly asked question is, for companies that receive the Catalyst funds, what is their future prospects for funding, or what are the next steps? So the answer to this is that companies that receive investment from a portfolio fund will typically work with the management team to grow the company and potentially raise additional capital. So there's no single next step. There's not something that applies to all companies. And finally, I think Dan did a good job of discussing this, but people often ask me, are Catalyst Fund dollars awarded like grant funding? And the answer to that is no. These companies are invested on the basis of financial return potential. I'll go on to the next slide, which discusses the frequently asked questions to our office regarding angel investment. And I would encourage those of you tuning in to, if you have any questions for either Dan, John, or myself, to type them in. But typically people ask us, what is a typical deal with the New Mexico Angels? So the New Mexico Angels are looking for, equity deals in the amount of $100,000 to $250,000. And the equity would be somewhere between 10 and 25% of the company. And this is so that they could provide some guidance. And so John, touched on that quite a bit, and he can give you better guidance on that. But another question is, how long does it take to close a deal with the New Mexico Angels? And from John's presentation, he mentioned that from the presentation date of the company to closing the deal is between 6 and 8 weeks. And finally, we get asked the question, what is the most important piece of a company to the New Mexico Angel investors? And that would be the management team and their commitment to the company. So I will finish up by just mentioning some additional New Mexico economic development programs and resources that might be applicable to some of you that are maybe beyond the startup stage. So you can see in red, the red asterisk points out additional resources for growing companies. These are companies that are ready to expand, maybe hire more people. So these are programs like the JTIP, Job Training Incentive Program, the LEDA program, the Local Economic Development Act, and the State Trade Expansion Program grant. So that helps with like trade shows and things like that. And finally, as Dan mentioned, the Catalyst Fund. So if you have any additional questions about these, feel free to reach out and I will direct you to the correct person to give you that information regarding those programs. So I'd like to wrap up by thanking you all for joining us today. And I'd like to thank John Chavez and Dan Brooks for serving as panelists with us today. And I would encourage you all to connect with us on our various platforms, social media platforms, and join our email list and visit our website. So with that, I'll let Joanna take over.
Thanks so much, Myrriah. As Myrriah mentioned, if you have questions for Dan, John, or Myrriah, feel free to type those in. There should be a little gray box to the right hand of your screen. So go ahead and type those in. And we do have a couple of them, so I'll read them off. Let's see. One question on the Innovation Vouchers program. The old program made 2 awards per month for $2,000. With the new program being quarterly, will it still be the same ceiling and number of awards, or will those be increased?
So as far as the innovation vouchers, we are just changing it. So it used to be monthly, and we will be awarding, I would say, between 2 to 4 awards quarterly. So that's the only change that there will be. The amount hasn't changed. It's just the frequency of the award distribution.
Okay. Next question is, do we need to belong to one of the accelerator groups to apply for a Catalyst fund?
Sure, yeah, happy to address that. So I would say that no, you don't have any, there's no requirement to belong to an accelerator or other type of group. It's really that you reach out to these fund managers, meet with them, present your company, kind of hear their feedback. If they like the company and it's a fit, and the due diligence process progresses, there's a chance that they'll invest in your company. But there's no kind of hard prerequisite for the majority of these funds.
Great, thanks. Next question is, and I think this is addressed to you, Myrriah. Do you use third-party review for technology companies?
Yes, we do. We have 3 reviewers. These are anonymous reviewers, and so we choose them based on their, so there's no conflict of interest with any of them being companies that are being funded. So these are all individuals that have been vetted and that are aware of the space, the ecosystem here. Some of them, there's one reviewer that's out of state, so we have some input from a diverse group of people.
Great, thank you. We have another question. Are the Catalyst Fund investors looking to invest in early stage, or are they looking for revenue history?
Sure, yeah, good question. I would say that there are different funds that would have different outlooks on that, but I think as part of the asset class of seed stage investing, there is a little bit more of a risk tolerance to invest in pre-revenue companies. So startup companies that maybe have a minimum viable product or a type of go-to-market plan that makes sense but might not have actually started selling can still make great investment opportunities. And I think that companies that may not have that robust revenue history should still look into it as a resource, because it's certainly not a hard requirement to have a history of revenue to be eligible for a venture capital investment.
Great, thank you. And we'll take one more question. This is the final question, and it's relating to SBIR. It says, our previous experience in an SBIR phase 3 was that in all phases, reporting required a full-time commitment from at least one employee, trips to Washington to meet with reviewers, etc. Is that typical? I guess that's to Myrriah. Oh.
I don't think that's something that's typical, Joanna.
Okay, all right. And we can follow up with that and maybe get more clarification on the question. So that concludes the questions. And as Myrriah mentioned, feel free to reach out to them individually, to the department if you have any questions. They provided some fantastic information, and it's really great to hear what's going on with those opportunities. So really exciting, and want to thank everyone, Myrriah and Dan and John, for your time. And just to let the participants of the webinar know some upcoming NMEDD Finance Development Team events that we have coming up. Funded does a webinar series as well, and that October webinar will be October 23rd, and our economist will be doing a webinar on how this new census will affect grant applications. Also, the New Mexico Infrastructure Conference is coming up at the end of October in Albuquerque. Fantastic opportunity to discuss infrastructure financing. We'll have a couple of really good panels, discussions. Juan Torres, the director of the team, will be leading a discussion on opportunity zones. And then our Rural Efficient Business Program workshop, our next one will be in Carlsbad. So if you are in the Carlsbad area, if you have businesses in that area, feel free to attend that workshop and address your energy consumption issues. And then the funded meeting will be December 11th, cut off for applications November 29th. And want to remind everyone that our newest program, the Credit Enhancement Program, we are actively enrolling lenders and enrolling businesses. So this is a wonderful chance if you're a business, whether startup or already in existence, and wanting to get a loan, a commercial bank loan, but are having difficulty getting the loan because of a lack of collateral. This is a great opportunity to participate in the program, and we can look at funding the gap in collateral so the bank will make the loan. So you can get more information on that and all these different events coming up with these links. Hope to see you at some of them. Here are the links for the finance team. Feel free to reach out to us. And with that, we conclude the webinar. So,
Joanna?
as mentioned, oh, sure.
Oh, yeah. Sorry, just one quick question or one quick comment regarding the last question that was asked. So I think that question might better be answered by the presentation by the Arrowhead Center tomorrow. That webinar I mentioned earlier in the presentation, which is between 1 and 2 p.m. So I would recommend that person maybe tune in. They can give more information regarding the labor requirements for the SBIR grants.
Okay, wonderful. Great information. That sounds like a good session. All right. Well, thank you. Thanks for the attendees. Thanks to John and Dan and Myrriah, and hope to hear from you all soon. Have a good day.
Thank you.
Thanks, Joanna.